Hello and welcome to your market update for October 8th, 2025 from CBN Financial. I'm your host, delivering the key market developments you need to stay informed and make better investment decisions. Market snapshot & key drivers. US equity markets advanced again today, with the S&P 500 climbing 0.6% to a new record close of 6,753.72 and the Nasdaq up 1.1%, also reaching historic highs. The Dow Jones Industrial Average was relatively flat, slipping modestly. Meanwhile, smaller cap stocks followed the broader trend, with the Russell 2000 rising about 1%. A significant undercurrent in today's activity is the soaring price of gold, which pushed past $4,000 per ounce. That suggests many investors are hedging against downside risk or seeking safe haven assets amid uncertainty. Driving the equity rally. Optimism around interest rate cuts later this year, continued enthusiasm for AI and technology themes, and a market willing to look beyond the ongoing U.S. government shutdown. Tech and AI names led today's gains, with companies like surging following announcements of new AI partnerships. On the macro front, global financial authorities are sending caution flags. The Bank of England has expressed concern over a potential sharp correction in equity markets, warning that valuations, especially among AI-oriented tech firms, may be overstretched. The IMF echoed those warnings. Meanwhile, analysts and strategists are increasingly comparing today's AI exuberance to past bubbles. Adding complexity. The U.S. government remains in shutdown mode, which is delaying key economic data releases, heightening uncertainty over fiscal stability, and potentially limiting near-term clarity around growth trends. What investors should watch. Consider 1. Valuation stress and sentiment shifts. When optimism runs high, markets can reverse quickly. Stay alert to shifts in investor sentiment, especially around AI, tech, and speculative names. 2. Rate cutting signals from the Fed. Markets have priced in at least one or more cuts later this year, but timing and magnitude remain uncertain. Any dovish tilt from the Fed could fuel further gains, while hawkish surprises could trigger volatility. 3. Safe haven follows the gold rally, signals increased risk aversion. Watch demand in gold and other haven assets, e.g. Treasuries, as a barometer of investor nervousness. 4. Earnings forward guidance. With macro signals murky, corporate fundamentals and forward guidance will matter more. Be selective in sectors and names with credible growth outlooks. 5. Diversification. Hedging in a market showing strong gains but also warned of overvaluation. Consider balanced positioning. Core exposure to growth themes, but hedges or defensive allocation where appropriate. Closing thoughts. The market is currently riding both momentum and optimism. Gains in AI and technology continue to power indices, but mounting warnings from central banks and global authorities call for sober vigilance. As your host, my recommendation to you as an investor is to stay nimble. Lean into opportunities where fundamentals support them, but also protect downside if the tide turns. Stay tuned, stay vigilant, and